Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and today we'll put focus on the new fund offers. So a table will just come up for you on the screen and we'll see how it has been a surge in NFOs in last couple of months. October it was 14, Jan we came to 17, but the amount raised has been hovering around the 3,000 to 7,800 crore mark. Come 2024, we've seen a massive increase here as well. So from around February, you will see that there were 20 NFOs that time, which garnered around 11,469 crore rupees. March was 19 NFOs, but the amount garnered there was 3,827 crore rupees. April, 9 NFOs with 1,532 crore rupees. It should shift. The table should go to the next particular month. The June number is the number which has been the highest in a couple of months actually. 17 NFOs which have garnered 15,227 crore rupees. So there's been a lot of action in the NFO space. A lot of them are sectoral themes as well. So we'll try and understand if the rush that we're seeing in equity inflows, it's largely led by NFOs, largely led by sectoral and thematic funds. And what should an investor do? Should they be aware? Is it a sign of over-exuberance? On that note, let's welcome Kaustubh Belapurkar, Director of Fund Research at Morningstar, Investment Advisor, and Dhirendra, Kumar, CEO at Value Research. Gentlemen, good afternoon and thank you so much for joining us. And I'm glad we are having this discussion at a time where there's so much action in the mutual fund space, which especially is led by NFOs. As I said, 17 NFOs garnered over 15,000 crores in terms of flows. We have seen a big interest in NFOs recently. Dhirendra, let me come to you first up. What is causing this? What do you think are the major reasons here?
Oh, good times, and it has lingered for a long time. And, new funds being sold as a story, and people like stories. As you know, every Friday there is a movie released. And likewise, once you have a lingering rising market, then investors make money, then they realize it, and a large number of new investors coming in. And there is a growing fatigue among the SIP investors because, they are doing well, it's rising, but, everybody wants a story, everybody buys into a story. And that is where, that need is getting fulfilled. And all these stories in a good market, they perform. Everybody thinks that, it is the result of their action.
And it seems like investors, like everyone else, are just latching onto any story which is served right now. So, Kaustubh, let me come to you. Your take on this question right now, and do you think it's time for some caution in that case? Kaustubh, I think you're on mute.
Yeah, sorry, my apologies for the technical issue there. Yeah, so I think Dhirendra hit the nail on the head. In markets that have been so extremely bullish for a pretty prolonged period of time, there's a fair bit of fatigue that's set in with, literally now the baseline expectation, unfortunately for, especially the newer investors have been set from the recent trend of, 15% north in any, regular index or, sort of actively managed fund. That's literally what we've experienced over the last, 3 odd years at least. So I think investors are looking for newer avenues, something that's more exciting. And typically when something which is kind of put forward as the next big thing tends to capture the attention of investors. And that kind of then flows into sort of, translates into flows. I think it's been a little exacerbated over the last, sort of 6 months in this year. It kind of started in 2023. If you just drill down and see what happened in terms of flows across categories, we saw a large pickup in small and mid-cap flows in 23. That still continues, a large part through SIPs. But I think this year, thematics, sectorals, there've been this whole host of fund launches, and I think that's kind of grabbed the greatest amount of attention. I think to the second part of your question, is there a lot of exuberance? I think, as an investor, you need to be very, very clear as to why you're investing in a particular fund, right? And especially the fund investors who are coming in new to the market, or even investors from the perspective of their own portfolio needs. I think that's the question that investors need to ask, that, if I'm buying into a new NFO or a sector or theme, what need is that fund fulfilling in my portfolio? I think that's the burning question that needs to be answered. I think these are signs of kind of, a fair bit of exuberance coming in, but, it could be different at different investor perspectives. I think that's important to keep in mind.
Okay. Dhirendra, comment on this then. Do you think that when we say it's time to be a little cautious, it is the case for every NFO, every sectoral fund that is coming in? Should investors not look at this particular theme at all for now? Or do you think, as Kaustubh was saying, it depends on investor to investor, maybe new, maybe old, how it's serving their portfolio needs right now?
No, I don't think it is a matter of, investor to investor. All investors can ignore these NFOs and they will not be deprived of anything. If you have built a thoughtful portfolio, and if you have built a thoughtful portfolio with, diversified portfolio, a well-performing portfolio with excellent track record and with a long-term view, and you have your tactical position for, for selectivity or emphasizing something in your portfolio, why should anybody invest in these funds, any of the new funds without any track record? And I don't think any of the good funds will actually be deprived of any of the opportunity. There is nothing which is, unique to these funds that only they can invest, others can't. Then I think, there is nothing unique in these funds from, of a kind. Once in a while it happens, maybe 10 years back, 7 years back, or, we got the NASDAQ 100 or, FANG Plus, and, they were compelling opportunity. It was not available before. Somebody had to launch one to actually make it accessible to Indian investors. And it was adding very meaningful diversification and value to investors. So those make sense. But I'm very confident that, if in fact, on the contrary, this is a very dangerous thing. It might linger for a while. We should not forget that, we had a great story called infrastructure. And it did not work for 10 years. And it was an expectation management disaster. And people did not make any money. There is nothing questionable about infrastructure. In fact, but the point is that, and it has worked over a very long period of time. But before that, large number of investors came, they got disappointed, and they got disappointed to the tune that, they will never be, some of those investors will never get back to mutual funds. So I think it is very important to choose the right kind of vehicle, and it is responsibility of the fund companies to, and at a point when the mainstreaming of mutual fund is happening, people are, SIP book of 20,000 crore is becoming big by the day, by the month. And people are beginning to understand that how to really, always in the past, investors have been opportunistic.
Okay. Dhirendra, looks like there is some technical issue. We are not able to hear you right now, but do take your point and do take your expert advice here as well, that some of the NFOs are already offering something that's already there in the market. Kaustubh, I wanted to understand from the fund's perspective, are they thinking of an ultra long term when it comes to some of the spaces, be it defense, be it energy space? Because, what's happening is some of these stocks have gone through the roof. And we are getting NFOs later, after those valuations are at much higher place. What's happening with the fund houses in that case?
Yeah, absolutely. And I think, what Dhirendra was alluding to is exactly the point that, NFOs, unless there's something very, very unique that it brings to the table, there's really no point in looking at it, because most investors, and a large part of them, are best served just purely investing in a good mix of diversified equity funds, doing that judiciously, and that takes care of your portfolio needs, right? And to the other point, in terms of why are all these fund launches happening? I mean, there are two parts to it, right? So one is there's been this whole regulation around one fund per category, and the only space literally. Now, I'm not a big fan of it, to be honest. They're finding space in this the sectoral thematic space, because obviously their diversified bouquets are all kind of complete. But the timing, in a sense, which you spoke about, and that's a big challenge, right? Because yeah, sure, the past returns look very, very great on paper. I mean, if you look at it, there's certain sectors, be it the PSU basket, be it cap goods, realty, you would see a great amount of jump in the past year or so. So on paper, these returns look great. But remember, when you look at the market and slice and dice it over any time period, you would see that different sectors, different themes would come to the fore at different points of time. And more often than not, as an investor, you tend to get the timing horribly wrong, because these performances are very lumpy, right? They're going to come, it's going to be a boom or a bust. And most often than not, investors come after the large part of the rally is already played out. If I'll just take you back a few years after COVID, you had this huge run up in tech stocks, 2020, 2021. While we didn't have too many tech fund launches, existing tech funds got a fair bit of money that came into the fund. But the investors came in too late into these strategies. So it becomes very, very risky in terms of the timing perspective. And I think that is the challenge. So either investor needs to come in with very, very realistic expectations. Ideally, don't take any thematic exposure at all, because the diversified equity managers already doing that for you, right? I mean, they're already expressing their views on certain sectors or certain sub-themes through taking more graded exposures in their diversified equity. I mean, that's what active management is all about, rather than trying to create a binary option, right? So I think that's something that's important to keep in mind. While obviously the asset managers are making these products available, I think investors also need to think about, alluding to my first point, what is that role? Is it playing any sort of role in your portfolio and meeting your financial objectives, or is it just because it's looking exciting on paper you want to invest?
Thanks for that take, Kaustubh. Dhirendra, I hope you can hear us now. And I'm asking you about this ultra long-term perspective of asset managers, because the conversations generally say that, okay, maybe if it's a defense market, long-term story of defense looks good, maybe the stocks are overvalued right now, so they are issuing it from a long-term perspective. First, I would like to finish your point that you were making earlier. We couldn't hear you. And then your take on what fund managers are thinking here.
No, my sense is that, everything works out well in the long term, but these are very high octane things. These are concentrated bets. These are, if you look at all the sectors or all the themes, why anybody should, the whole reason why mutual funds were invented was to, help you get diversification with convenience, with ease, with your 500 rupee SIP. And these are, they might be a special story, they might be tactical, there might be a story around it. One can always weave any kind of story in a rising market. And my sense is that everybody is looking for an excuse to launch a new fund with a new story, because they sell and it makes it easy to sell. And period. Most ordinary investors who are doing their SIP, they should not get distracted. They should invest more in those funds. They should always choose, when it comes to mutual fund, choose a tested, proven ones. You will not be deprived of anything meaningful if you're not investing in any of these funds. Don't think of missing a bus if you're ignoring all these.
Take that point, gentlemen, and it's a very interesting discussion, but we have to take a quick commercial break. On the other side, we'll continue our discussion with our experts on the big NFO rush. Stay tuned. Welcome back. You're still tuned into MF Corner, and we're talking about the big NFO rush and whether investors should go ahead with investing in NFOs or not. We have Kaustubh and Dhirendra joining us. Kaustubh, let me start with you, because we've seen so many NFOs. The number has been so huge, right? Did anything stand out? As Dhirendra was mentioning earlier, the NASDAQ fund, some of them, the fund of funds to invest in US treasury markets. Those are some of the ones that would stand out. In the recent ones, is there any theme that you think is still working?
I think, again, I don't think anything specifically stands out for us. Again, going back to my earlier point, just stick to your tried and tested, diversified equity funds. Any sector theme that the fund manager is bullish on, they will take a graded exposure, overweight exposure, or underweight, as the case may be, depending on their views. And that's pretty much going to solve purpose. Unless you're yourself a fundamentally driven, which is a very small segment of the market, then that's something that a fundamental investor, there is a vehicle that's available to him or her, but they could do it by buying stocks themselves. But that's a very small part of the market. I think, like I said, largest part, just stay put to, don't change course, because there are all of these sort of new fund offerings that might look exciting. They probably don't serve the purpose for your portfolio.
It definitely is looking exciting to investors, as we've been talking about how much money it has been garnering. Dhirendra, your take on the present NFOs, anything that you think stands out? I specifically also wanted to ask about Tata Tourism Fund. This is not something that I think we have seen earlier. Of course, it's a sectoral theme again, but tourism as a space is not something that we talk about so much because there are a handful of stocks here.
Yeah, I think, most of these sectoral funds or the thematic funds are proving to be a fairly opportunistic bet. And one or two things which actually stands out for its novelty. For example, the microcap index fund was interesting. And here is I'm quite wary of these sectoral thematic index getting created for somebody to write and, individual investors' money into those funds. They are not mainstream index. They are being invented to mount a mutual fund on that. Don't get attracted. Don't get carried away by that. But that was interesting because that is one component of the market which investors are excited about. It could be a tactical allocation, and most mainstream funds are unable to provide you access to the micro cap segment of the market. So that was the one interesting thing, particularly about the Tata Tourism Fund. It is an interesting thing, but once again, before I say anything interesting about this fund, I would say that most investors will be fine to ignore it completely. And also, I would like to warn people and remind people that recall the infrastructure days. Everybody got excited and everybody remained excited without any, and it was an expectation disaster. For 10 years, it was a long wait. Some did well, some did poorly, but generally speaking, the kind of euphoria which we saw around infrastructure was a great disappointment. And, not to forget that Tata Mutual Fund itself launched about half a dozen infrastructure fund, which over a period of time got merged into other funds. And most investors should steer clear of anything which looks too good to be true in the short run. I think the long-term tenets, and it should be a very small part of something, only for something you get excited about for a reason.
Good to be true for short term. That's the big takeaway, because that's what we've seen in last 2-3 years, the returns in a short term. In fact, the sectoral thematic funds are 55% of the top equity mutual fund rush that we've seen, and it has increased from 22% that we saw in January. So big uptick there as well. Gentlemen, we have to slip into another commercial break, but we'll continue the conversation on the other side. Stay tuned. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most...
Welcome back. You're still tuned into MF Corner. We are joined by Kaustubh and Dhirendra. We were discussing everything about this big NFO rush and whether investors should be wary or not. Kaustubh, just want to understand what has been the fundraise by NFOs in last few years. How does it compare with the first 6 months of calendar year 2024?
Sure, Sonal. So I think it's been a great time to be an asset manager in terms of obviously new fundraisers. Flows in general have been great, but I think from the NFO perspective, I think since the COVID year, we've seen an increasing amount of money come in. I think 2021 was the classic case in point, but there's certain reasons where you had a lot of money coming in. For instance, you had this whole fixed income sort of passive hold to maturity sort of products, which were interesting, and that saw a lot of money till obviously the taxation changed. I think year to date, we've seen about 50,000 crores coming through new fund offerings across close to about 100 NFOs. But a significant amount of this actually come into sectoral thematic funds, right? About 33,500 crores. In the past few years, I think, like I was alluding to earlier, thematics were picking up steam, but they weren't the largest sort of garner of assets. I think this year, given that we've seen these elevated levels, the numbers have changed, and I suspect given this whole pipeline that continues to come up, you'll probably see continuing interest in new fund offerings and sectoral thematic funds, which we see quite a few of that lined up over the next few months. So I think that's been the general trend when you think about flows into the markets.
Actually, that was going to be my next question to Dhirendra. The pipeline of NFOs, are they again a lot tilted towards sectoral funds?
Yeah, they are. Every fund company is looking for an excuse to launch a new fund. Because that is working. They are succeeding with it, and some are succeeding big time with some of these new funds, which are very, very generic in nature. They are not really, they are not making available, or it's not invention of an idea which was not available or not known to any of these fund companies. Business cycle fund, I imagine that, most actively managed funds are attempting to do it for a reasonable part of their portfolio, or the sector funds, oil and gas, energy, manufacturing. I don't really find the novelty here. I find that there is a case where there is also an economic supporting it. Fund companies, when they start and when they are small, they are able to charge more. When they succeed with their older funds, they get big, and the regulatory framework is such that fund companies are supposed to charge lower expense fee as they get bigger. Bigger they get, lower they earn, or in percentage terms. So they have greater leeway to spend money or incentivize people to encourage them to sell these funds. So there is a favorable economics. There is a favorable mood, and there is aggressive sales and good times. Many a times I'm finding that money it may not be fresh money. The same intermediary is routing some of the funds where an investor has done well, the naive investor has done well, and his money is getting redeemed and getting routed in these funds. That is the market reality. That is the market dynamics, So I don't think, there is anything special about it. Good times, these are symptoms of good times.
Okay, we do take that point, and that's the reason why this conversation today was so important. Dhirendra and Kaustubh, thank you so much for joining us today on something which is so topical. But we have completely run out of time on MF Corner today. But you stay tuned for Closing Bell to take you through the last hour of trade.
Influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.